Hello everyone and welcome to another week, another episode of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro dollar, pound yen, New Zealand dollar, gold and EURUSD. Now firstly on EURUSD, as you know, on a big scale we are tracking either a free wave recovery that can take us here above 2018 highs, or maybe even a consolidation if we would see a drop away from January levels. But so far this market appears to be very strong, so I really favor this count on the right, where I'm looking for wave 5 in progress. So I would not be surprised to see more upside here, but on the intraday charts I think there is a chance for some resistance. I'm still tracking and looking at this potential flat correction that could be underway. It's an irregular pattern where perfect support for a next much stronger bounce can be after this wave C that could come back towards 1.2 level. Of course, there's another risk for potential resistance if we consider that this could be even an ending diagonal here, okay, or a wedge pattern if you're just focusing more on basic technical analysis. So in either case, I think that this is quite important level for the next few sessions. If we are going to see a very strong break through that levels of resistance, then obviously I would label and look for potential wave 3 to be in progress rather than still ongoing wave B correction. But overall I think that euro dollar is bullish, that we will see more upside, but there is, as I said, potential resistance coming. So if you are maybe looking to go into the euro dollar, maybe there is better opportunities after a pullback, of course, if we get it. Now let's take a look also, we said, on pound yen. Well, pound yen is trading quite nicely, and we have seen overall pound strength recently because there was speculation that, of course, Bank of England will have to fight inflation, and that, of course, economic activity is picking up, so maybe they will have to consider new measures soon. So I think that pound overall could stay strong here. And looking at this structure here on the daily chart, looks like that we are going to see more upside here within wave 3. I'm looking also at the 4-hour chart, where I'm observing the price substructure of this wave 5 of 3. And as you know, wave 5 is a motive wave. It should be made by 5 waves, and this is not the case yet. So I'm looking here for more upside, maybe just a consolidation now that is unfolding here for a wave 4. So expecting more gains as long as we are trading above 152.38 level, because that's the level where wave 4 should not make an overlap. Okay, so I'm looking for this trend to continue. Also, what I love here about this analysis or around this price action is that we have seen a break above the previous highs here and then retested these highs for a few times. Okay, so I'm looking again for potential retest of 153.30 if I'm not mistaken. So as long as we are above that level, of course, retesting this level, and then I would be looking for more gains, while this invalidation level should not be breached. If we are going to see suddenly a break below that level here, then of course this market could easily stay even trapped in a longer consolidation here. Now let's take a look also on New Zealand dollar. New Zealand dollar is currently moving sideways, but overall is still looking bullish. Firstly, here on a daily chart, I think that there was a very clear and strong recovery away from March lows of 2020. So I'm looking for more upside, because notice that the recent pullback was made by 3 waves. It came to 50% retracement of wave 3, which is normal when you don't have wave 3 extended. Wave 1 was much longer. So I'm expecting more upside here, because as I said, this was a 3 wave retracement. And also, if you look closely on intraday chart, you can count 5 waves up here. So this is normally indication that the market will stay in uptrend. So this is your wave 1, wave 2, extended wave 3, and then you have wave 4 and wave 5. Also, this could be part of a head and shoulders pattern. If you look at the whole picture here, you can see left shoulder, head, and maybe right shoulder can be a complex one, and there are a lot of occasions where you have at least one shoulder more complex than the other one. So in my opinion, this could be a very nice bullish case, especially if we can see market reversing and breaking this neckline resistance around 73. So daily close above that level, I believe, would open doors for a retest of these highs here. So for now, still consolidation, but there is a chance that we will make a higher swing low here. Now let's take a look also on gold. Gold is also breaking out when looking at the daily chart, and we've been tracking this consolidation for a while. So what I'm looking at right now is a potential completion of a wave 4 down here. Why? Because we actually bounced from a perfect trend line support. We also had some fib levels here. Second zigzag was equal to the first zigzag at this area, and also the former swing highs here and swing lows as well. So this was all very nice projected area for a completed wave 4, from where we are seeing a reversal. And so far this reversal appears to be impulsive because of personality. We don't have 5 waves up yet, but looks like these 5 waves can be in progress. So this could be in our advantage when we are identifying impulse in progress, because we know that there is room for more gains. In fact, we also took out this trend line resistance, so I'm thinking about more upside after consolidation. And if you look at closely at the 4-hour chart here, maybe wave 4 consolidation here is already in progress. Notice a very slow price action here. Looks like a pause on the way up. Okay, so something similar like we have seen here in the past. So I think that there is a better opportunity on the long side, especially after setbacks. Now the first support would be the 1850 and 1844, and of course you should also keep an eye on this trend line support. As long as this one holds, I think that this trend or direction for now is very clear. And now finally, let's take a look on EURUSD. Now EURUSD is making some recovery here, looking at the weekly chart, away from this trend line. And normally these corrections are very important if they unfold around the trend lines, because when correction finishes, you know that major breakdown could occur, okay, because you are at the potent trend line. So looking at the daily chart, I would not be surprised to see this breakdown coming, especially if we consider that we have ongoing incomplete bearish cycle away from this 2020 October highs. This was wave 1, you had a wave 2, nice extended 5 waves drop for a wave 3, and looks like that now we could be here consolidating for a wave 4. We are slightly above 38.2%. We could even rally further if we consider that the former wave 4 is right here, but overall I think that this is quite nice potential resistance area for this pair. So I will be tracking this one very closely for, let's say, for the next week or two. I mean, if we are going to see a bearish impulse, here is our intraday chart. If we are going to see a bearish impulse, meaning a 5-wave drop from that highlighted resistance area, okay, then I think that this could be a very nice trigger for more downside in upcoming weeks, maybe even months. So in such case, I would be interested to look for potential opportunities on the short side after pullback, of course. So the most important thing is that we identified potential pattern, potential resistance, and then we wait on market to confirm our bias, our wave count or expectations. And when this happens, that's when we can finally be looking into potential trading setup. Traders, thank you very much for your attention, and talk to you next week. Bye.